Good morning and welcome to Digital Dealer Webinars. This morning's webinar is Optimizing the Power of Your Data, brought to you by Zalud. Stu is the Director of Digital Services, NADA Used Car Guide. Leveraging over 30 years of automotive retail experience, Stu brings a dealer-focused perspective and insight to his role as Director of Dealer Services for NADA Used Car Guide. Stu joined NADA in this newly created position in April 2007 and is responsible for promoting NADA Used Car Guide's data and services to franchise and independent dealers, presenting at various industry events and contributing to the development of future products and services to meet changing dealer needs.
And thanks very much. I appreciate being able to spend a little bit of time with everyone today and really dive into a little bit deeper and maybe share with you some big picture thoughts about this confusing arena that we're all living in today and we deal with every day. It's obviously an issue of both concern in some areas as well as it's an advantage in many areas in how all of you run and operate your business today and will do so in the future. What I want to do is just talk a little bit about where we are in terms of our agenda today. I think the questions that all of you should probably think about in terms of the big picture is where are you today? Why does this data issue mean, why should you care about it? What does it mean for you? I want to talk a little bit about what we, NADA, believe is probably a good data agreement and an important feature of a data agreement that we were intimately involved in crafting and forming for dealers. Obviously, in this data, there is something in it for the dealer, and I'll talk to that a little bit, and I'll show you a relationship of a good data relationship, one that we have established as a data alliance here at NADA, and I'll give you kind of an update of how that's working, as well as some of the things that can be returned to those that choose to participate in what we have crafted with the help of our partner. So let's talk about the situation today very quickly. Obviously, the DMS is the hub and the center in most stores of most of the data collection points. CRM pushes it in there. Your accounting functions are obviously in there. All your F&I portals end up there. Service and parts, it all resides there at one point in time. But part of the problem is there's people in there and out of there all the time for various reasons. Some of those reasons are valid and justified, and then there's others that probably are not necessarily, the need is not as great as the need for the data that resides in that DMS system. Obviously, you've got third parties, those are your vendors, and you're pushing data to them, and in many cases they are also in there extracting it for vendors that you're doing business with, whether it's the vendor himself or he's contracted that to a third party like Digital Motorworks or Authenticom. And those are just two of the larger ones that work on behalf of OEMs as well as vendors in your system and out of your system. You clearly have the business reporting requirements from a financial standpoint with your OEMs, as well as all your incentive data and your delivery data, both for certified and for new vehicles with the OEM. So that's kind of where we are in today's world. But watch what happens when we throw in all the third parties in there, and this is not anywhere near all of them. I just chose a slide that we've used in the past in different presentations, and this is not anywhere near the world or the universe as it currently exists, but I'm trying to illustrate here how cluttered it is, how many people are out there, how many uses there are. Most of them are valid, not all of them, but most of them are valid. And let's face it, the world today revolves around data. Our analysts use it every single day. We look at over 1 million transactions inside just the used car guide portion of NADA to help them craft by far and away the most market reflective values that we possibly can, because everybody out there, as you can see on the outside of this circle, dealers, government, insurers, consumers, and I left out lenders, but lenders as well, they all utilize our values in some way, shape, or form. So, the data that we look at helps us do a much better job and helps the really smart people do a much better job in crafting correct values. The same is true in the world that you folks live in too. I mean, transactional data today has become much more of a driver than it ever was. The access to it in an aggregated form is better. The data sets are better. Not all data is equal, but it's out there and it's formulated in different formats for all of us to use. Why should you care about who has it, where it goes, and so on and so forth? All these bullet points are important, but really, we believe, we, NADA, and we have partnered with the folks at J.D. Power for our data alliance currently, and they believe, as do we, that data is your data. Now, I know that there's some OEMs that believe the data is theirs and it's their customers. There's probably some vendors that believe it belongs to them as well. I will tell you unequivocally that NADA's position is it's your data. And we want to help you manage that data in a better fashion, and that's kind of a long-term picture that we're currently beginning to investigate and look at possible solutions. You clearly have a lot of people in your systems today accessing your data, and access is haphazard at best. The next point on this slide is one of great importance, and we've done an awful lot of research. We've spoken to a lot of our members. We've also conducted some research with our members to see how bad the problem is or isn't as it currently exists out there. We went into all the different DMS systems. We didn't just use one of the big 2 or 3. We looked at them all. We looked at various different size of dealerships and brands and makes in different states. So we have a pretty good idea of where this whole thing is right now. But rarely do we ever find a dealership that goes in on a regular basis and purges their list of access of people that have access, people that have usernames and password access. In the real world, what happens is you select a vendor to do something for you, be it direct mail, be it a service reminder, who knows what it is. Maybe it's a recall reminder. But those people obviously need access to your DMS system. You provide that to them with a username and password. In they go. They take the information in the fields that they need, and they extract it, and they create whatever message it is, and they send it out on your behalf. 6 months goes by, and either you've changed your method, you've changed your approach, but you probably, for whatever reasons, change vendors, and no one ever goes in and takes that original vendor who had access to your data out of the system. And my recommendation might even be that once the piece is provided and the task is created, the vendor tells you that they're done in your system, you should ask, tell them, let me know when you're done, then take them out. There's no need for indefinite usage of access to your system. So that's a point that I think is important. I think everybody should go back and ask your vendor to provide you if you can't get it on your own. Some of the web-based DMS systems allow you to go in and get it. Some of the proprietary systems that are out there do not. You have to ask for it, but ask them. Ask your representative to provide it for you, and I think it'll help you limit that list. During our investigation, we actually found a dealer that had 94 people accessing his system, and I guarantee he wasn't doing business with all 94 of those people. Transactional data today drives our business, both new and used vehicles. I mean, we've all seen the examples of the good, bad, and the ugly. We all know that it's out there. Transparency is not going away. Gen Y buyers are becoming a much greater force in the marketplace, and somewhere in the next 8 to 10 years, they could comprise up to or maybe as much as 50% of your buyers. And when that day occurs, ladies and gentlemen, and it's coming very quickly, you're going to need to provide that transparency. So it's just going to increase. It's not going to decrease. And, and, and as I said earlier, there's a lot of data out there. There's a lot of people pulling it for a lot of different reasons. We know from our investigation that some of it is far better than others. Even some of the stuff that we get scrubbed, which means it's already been through a purification process, still has to be refined because we find duplications and all those kinds of things, which we do in our warehouse when we're creating our values. And last, and probably the single most important bullet point on this slide is it's critical that you know how your data is used. And I would suggest that most of you don't ask that question, and if you do, you don't get a written response to it, and I would ask for that written response as well, because we have found, and I'm sure you've all seen the blogs, and you've all been to the sites, and you've read automotive news, and unless you're under a rock someplace, you know that there have been some violations and continue to be some. That doesn't necessarily mean that the vendor is bad or poor, but when these things occur, if your agreement is that they shouldn't, then you have documentation, and it's certainly easier to get it corrected, stopped, or changed or modified if necessary. There's a lot of stuff out there going on, and it would, if I still owned a dealership, which I did for over 30 years, I would certainly ask that question, and I will tell you that I never did ask it when I was in business. Here's just a little bit, and I'm not going to focus on this very much, but we did some dealer survey stuff, and this is just a vendor that there was really not a whole lot of control. There isn't an opt-out in the system, so there's some regulatory stuff that we're working on with all the parties to be, and there's more to come on that a little bit later. I really don't want to talk too much about it because we're just in the process of sort of formulating what might be a solution. But let's talk a little bit about indemnification. What's indemnification? What does it mean? Well, as I told you earlier, we have formed a data alliance with the folks at J.D. Power. And one of the biggest reasons we selected Power for this data alliance is because they concur, number one, that it's your data, and number two, their dealer agreement, like I suspect every dealer agreement that you've ever signed to have somebody take your data, doesn't give you any indemnification. And when we started this process with the folks at Power, the first thing we requested was a rewrite of the dealer agreement to include indemnification. And here's what our language states, and you can leave out PIN if you want to take this language and modify it or use it with some of your other dealer agreements that you currently have, if you can find those. In my store, in my lifetime, I probably couldn't go back and retrieve them, but rest assured your vendor has a copy of them, whoever that might be. PIN shall indemnify and hold the dealer harmless with respect to losses, costs, fees, and damages incurred by the dealer, including reasonable attorney's fees as a result of any government or third-party claim against a dealer. So if there's ever a breach of the data, and it's the fault of the contractor, that there is protection for you, the dealer, should someone sue you in that action. And rest assured, you will be named, I'm sure, if that action were to ever occur. I will also tell you on a positive note that the folks at J.D. Power, in 20 years of being in this space, which is another reason we selected them, in 20 years that they've been doing this with dealers across the United States, there has never been a breach of J.D. Power's data by anybody for any reason. Let's talk a little bit about Dodd-Frank. Dodd-Frank obviously is legislation that changes the regulatory requirements for most lenders. And I want to give you this example because this is a real life use of the data that we have and how it was used in a positive fashion to clearly help your business, all of you, all of our members. But when the FTC started to investigate Dodd-Frank, car dealers asked to be excluded to any of you in your F&I departments. The agreements were between the lenders and the consumers, and dealers should be exempt. Well, the banking lobby obviously felt that it was important to put dealers inside of Dodd-Frank, so they created a message to the FTC that consumers spent more money with automobile dealers than they did on a direct lending basis going right to the lenders. Consequently, for all intents and purposes, dealers should be part of Dodd-Frank. In our testimony in front of the FTC, we were armed with 3 million finance transactions provided to us by the folks at J.D. Power. And here's what those 3 million transactions showed. They showed that in reality, in the years 2008, 2009, and 2010, that the dealers basically saved consumers a little over three-quarters of a basis point in 2008. It jumped to almost 1.25 basis points in 2009, and it rose to over 1.75% in 2010 with the turn to leasing with most manufacturers. These were 48-month purchase contracts, and they were on new vehicles only. Once we showed the FTC that in reality the bank was flawed in what they were saying, and they didn't have any data to support their position, the FTC excluded you, the car dealer, from Dodd-Frank and the obvious costs involved, as well as the constraint on some of your operating profit going forward. The fight's not over totally because now we have the CFPB to deal with, but at least from the Dodd-Frank point of view, our data and our data relationships on your behalf kept you out of the FTC part of this thing, and obviously the lenders are squirming today because they're in and we're not. The actual results of the Dodd-Frank, if you look at just that last line, in a general sense, the CFPB can only cover the banks, Rossman said, and Rossman works for the National Consumer Law Center in Boston, and he's one of their attorneys, he's one of their authorities inside the CFPB, and he indicated that, and basically what he's saying is the data that was provided to the FTC is the reason that lenders are covered and dealers are not. Here's the sort of our role as we see it in all the data issues going forward. We call it a data agreement standard, but it's really the overall data world that we're all living in today. Number one, our role is to represent you because we clearly, I think, have a better chance of getting everybody at the table. And by everybody, it's a big world because it's DMS providers, it's OEMs, it's vendors, it's an awful lot of people that all have to take a look at this issue and revisit it in terms of where should we go. We have to educate all of you, and that's what we're trying to do partly today. We have to address the concerns over the agreements and how it's used. And then last, and clearly certainly not least, is we have to sort of watch it and make sure that everybody's living within the rules of the road, so to speak. Our best approach in doing all this was to form an alliance with the leader in that industry, who happens to be J.D. Power. And those folks have exactly the same approach and attitude that we do at NADA. They have full integrity. They believe the data belongs to you. And they have the ability to provide all of you some very, very valuable operating reports to help you fully or better, more effectively and more efficiently operate both your new and used vehicle departments. It's part of a program that we're encouraging our members to participate in. And the participation, number one, is totally free at no charge. And the return to you, the what's in it for me, is number one, better representation on our part. Obviously, we can use the data internally. They share this data with us every day for our used car values. We also display it in a tool called Appraisal Pro, and then we use it in Capitol Hill, and we use it with the OEMs when necessary, to fight on your behalf and to further validate our position, because it's pretty hard to dispute the data if it supports your position. And if it doesn't support your position, you know that, and you don't go out on a limb, much like the bankers did, because they didn't have 3 million finance transactions, and if they did, they didn't utilize them to reach any conclusions. What's a good data agreement? Well, here's what we believe is a good data agreement. We believe this should be the standard of all your agreements. Number one, it's your data. Number two, the data needs to always be confidential, and individual dealer data should never be exposed either to OEMs or to other dealers. So there's full confidentiality. That's a huge portion, a huge part. There's no identifying way that anybody can trace an individual sale back to an individual dealer. Dealers receive those reports, as I talked about, and I'll get into those in just a minute to show you what's available. We obviously help move the industry forward faster, and we get them thinking and talking more about transactional data. And let's face it, if we have that data, the decisions we all make are more informed. There's gaps in everybody's data, and I don't care whether it's Manheim's wholesale data, J.D. Power retail data, there are gaps in the data. And when those gaps occur, somebody has to make a subjective decision in terms of valuation. The bigger the database, the bigger the sample size, the more data that's in there, the less likelihood that that's going to happen. My example that I use quite often is take a low volume luxury product in a late model car. When there's not a lot of dealers participating in this data sharing, there's more likelihood that it'll return a zero value, and then the editorial process has to change and become more subjective. And obviously, last but not least, I've touched on this before, but you can never touch on it enough. The better data we have to work on your behalf, the better representation we're going to be able to provide to all of you, no matter what the issue going forward. Here's how it works. It's pretty simple. The data is pushed, and I can't stress pushed enough, because we want to make sure that everybody understands that there's no intrusion into your DMS system to make this happen, other than the way some DMSs are set up. There has to be a one-time download to set up the parameters correctly to get it to push from your F&I system to the folks at J.D. Power. So they install the download and the F&I system on a one-time install. They can go back and pull history out of your DMS system, because not only do you see your current month, you also see the previous year's data, assuming you have had the same DMS system in place. And that's important to compare apples to apples. Am I doing better this year? Am I doing better last year? And if so, what's the reason? Is it weather related? Is it inventory related? Is it to interest related? Is it to acceptance of my product? Why? It tells you, it begs the question of why, and you have to go find out why. But at least it brings it to the forefront for you. The data goes to J.D. Power. It's processed, and it's queried back to you, and it's real time. As quickly as you get a deal into F&I, it actually gets into the PIN data set, and when you open up your reports the following day or the following day or two, depending on how often you look at them, you're going to see up-to-the-minute time, real-time data. And that's a big difference between that and most other systems, because not every system processes it, turns it around, and gets it back in a timely fashion. Why is PIN a good data relationship? Well, as I said before, it's free. They monitor the activity for makes, and also you get to see some competitive data in your marketplace as well, which is really important. Um, you can see grosses and unit volume for new as well as used in your particular marketplace, and that's a nice feature to have, as opposed to waiting for somebody again to return a report 30 days after the fact, whether it's a cross sell, and there's nothing wrong with cross sell. They're good reports, except you get them about 30 to 45 days after the close of your month. You can't react. If it's the 20th of the month and your average gross is $400 below the market average, and your volume is also less, that's the time to address that problem, not 45 days later. You could fix it 45 days later, but you've got a better opportunity to do it real time. You get to look at both your new and used and F&I performance versus the competition. You can find out real-time true market values of cars traded in. I know there's tons of tools out there, including one that we offer called Appraisal Pro that helps you value that kind of trade-in. All that data is right here in this tool. So you can go look at a 2004 Ford Focus SEL and determine how's that car doing in your marketplace, and is it something that you should be aggressive on in terms of appraising, or not be aggressive. And by the way, how many days is it going to take me to turn it? I think that if you take a look at this stuff and you can see it, they do have a demo of this product, but I think if you see it, it's very impressive, and it will certainly help both your new and your pre-owned operations. Here's some of the key performance indicators that they allow you to look at inside the tool. You can look at, obviously, the trends. You can look at your return on inventory, and that ROI is a true return on inventory, because when they set this system up for you in your store, they ask you about your average reconditioning costs. They also ask you about any dealer packs, your group ad costs in terms of new. So we believe here at NADA, and one of the reasons we use this transactional data in helping us determine our values, is we believe that the PIN data is far and away the most accurate transactional data currently available in the marketplace today. You can look at your average deal recap. You can actually see in this tool by zip code, where are you doing well and where might there be opportunities for improvement. And clearly, if you were going to do some kind of a targeted new car or used car campaign, you could go to those poorly performing zip codes, just use those for your mail campaign, go back in the following month and measure the effectiveness of that campaign. It's a fabulous feature. We show you franchise performance, so you can see in your marketplace who's doing well. So if you want to go out and invest some more money in a store, you can pick the one that offers the best opportunity for return. The finance and leasing is very interesting. It absolutely is a piece that, again, had I had this when I was in business, I would have utilized it a lot. But it shows you in your marketplace, again, every lender. It shows you their percent or market share, as well as their buy rate. So is that important on new? Probably not, because most OEMs are doing captive financing. But it sure is important on secondary, and the spread on some of the secondary lenders is tremendous. It could be 5, 6, 7, 8 points between the buy rate of one versus another. So my point is if you do secondary, or if you have that customer who becomes the secondary deal because of his credit situation, you can now at least make sure that lowest buy rate subprime lender gets a shot at that business, because it'll make the deal more attractive both for you and for the consumer. And again, this information is available on both new and used. Here's what you see on their dashboard, which is what I would encourage all of you that participate or choose to participate. I would encourage you to set this up on your desktop, laptop, go to it periodically and open it up. You set the boundaries for this, and it's a little hard to see here, but what you're looking at is year-over-year data and the difference. So if I take that first one, in the year 2011, I sold 502 vehicles for this period of time, which is it's January through May, and this year I've sold 2,100, so I've increased my percent. I'm doing a pretty good job this year, or I did a very poor job last year, one or the other, or a combination of both. You can see, for example, this dealer has chosen to pick up his finance per unit, his reserve on his per unit financed, and a year ago the store was doing 847. That's the one below the vehicle sold, and in 2012 they're doing 740, so they're off 12.6%. Again, remember, you set the barometers. If you look at the second one over on the top row from the left, you see a red, yellow, and green. Those percentages were set by the particular dealership, and he's using average gross. So if the gross is 2,000 and above, it's in green. If it's up to 1,300, it's in yellow, and below 1,300, I believe, turns to red. So again, very valuable, a great tool to use, and our dealers find that it's a valuable piece of information. Again, you can see it for both new and used. The trends show both in terms of vehicle in bar graphs as well as numbers, and again, I know this is difficult to see. I don't want to spend a whole lot of time on this, but what we show you here is month by month, what's the average gross, what's the real return on investment, how long did it take me to turn the car, and the reserve per unit finance, the service contract penetration, and the dollars per service contract unit. So it's great stuff. They do the same thing on used as well. And then again, if you want, you just look at the bar graph and you can see where you're doing better and worse. The period selected is blue, and the previous period is the gold. So in this case, in March and April, something certainly happened this year that didn't happen last year, and now in May, they're not doing quite as well. So it's a great snapshot. It's easy to get to, and it's very easy to understand no matter who's looking at it. I want to add that this is all password and protected. So in each individual operation, you can limit or expand who can see what, be it new and used. Some stores are totally transparent. Everybody sees everything. Other stores prefer to limit access. Here's a return on inventory. And again, if I just look at, it's broken out by model. This happens to be a Ford store. So if I just take that highlighted Ford Focus and I'm looking at 2012, for the month we're looking at, we sold 57, and the average dealer sold 38, I believe. So we're doing pretty well. And when we go over to the gross, we're making a little bit less, but we're probably making it up in terms of our volume. So that's a good set of numbers. It identifies models overperforming in the market based on volume, and it also identifies underperforming in terms of gross. So again, a valuable information. Some of you probably have access to it in other tools, but here it is, and it's all free, and it's all at one spot. It's pretty neat. Here's that finance sheet that I referred to earlier. This happens to be, I believe, Arizona. So it shows Ford Motor with about 51%. Now, obviously, I'm looking at new cars, and I'm looking at Ford finance cars. So the drop-down boxes, which basically are up here, you can change by model, by make, and you can go from finance to lease to all. But obviously, because it's a Ford that they've chosen, for this example, Ford Motor Credit has the predominance of the market share. But here's the buy rates out here on the right. And again, if you look at some of the players in the subprime business, and I don't know that there's very many in this particular example, you'll see quite a spread in here. Very helpful. It also shows you how, in real time, if this were live, it does highlight the fact that terms are extending. We see more and more and more a higher percentage above 60 than we ever saw before, and obviously now we see up to 78 months in some cases. Here's that Google map. It also, besides the pinpoints of where you're selling the cars, it also does it by zip code. It's a great feature. I want to spend just a real little bit of time and play a very short video for you that kind of highlights what it is we've been talking about.
Everyone knows that knowledge is power, But do you have all the information you need to assure you're not leaving money on the table when making pricing, financing, and inventory decisions for your new and used vehicles? The Power Information Network gives you information you can't get anywhere else. Data that helps you make more informed decisions in your business, giving you a powerful competitive advantage. With timely point-of-sale transaction data for new and used vehicles from over 9,500 participating retailers, PIN helps dealers manage risk, make informed inventory decisions, analyze competitive benchmarking, and more to drive your business to new heights in terms of sales and profitability. And now, with PIN's strategic alliance with the National Automobile Dealers Association, you have over 20 years of industry experience and a shared desire to support the dealer body, empowering you with the tools you need to make more informed decisions. Participation in PIN is free, so what are you waiting for? Enroll now. The Power Information Network. The power to drive your business.
That 9,500 number is now over 10,000. I believe it's a little bit beyond the 10,000 franchise range. So it's a significant number, and that's another very important point. There are some rural areas, there are some metro, obviously rural and metro. They have participation in all the metros. If you are in a rural area, it will probably show you data that's the closest to you, which, for example, let's take southern Colorado someplace, Pueblo, Colorado. You'd be looking at Denver data, and you probably might also be looking at some New Mexico data, depending on how the region is set up. And then it continues to roll up, and you can also see it on a national basis as well. Here's why PIN is good for all of you. Clearly, we believe, as do the folks at J.D. Power, that it's your data. The agreement clearly sets the standard because of the indemnification. By the way, I'm happy to share that with any of you that want to take a look at it. My contact information is at the end. I can send that out to you in an email, and you can look at it. You can also plagiarize it and use it with your other vendors if you'd like. Our data is always confidential, and there's never, ever, ever any individual dealer identification, and that's very important. The reports that you saw sort of highlighted are free, and they're available 24/7. And again, they're live. They move every day. It helps us move to the forefront in using this data, and we do use it every day. So the larger the sample size, the more of you that agree to say, yeah, let's do this, the better it helps us. And obviously, it helps us represent you. And the most recent example of how that helped in a big way is Dodd-Frank, because I'm pretty convinced, as are some of the lawyers who actually did were actually grilled by the FTC, some of our legal team. They're convinced that the single biggest reason that we're not in this is due to those 3 million transactions that we had access to because of our data alliance with the folks at J.D. Power. PIN's good for NADA because it supports all our goals and clearly helps us get a more accurate used car guide. And that guide, whether you use it to appraise or not, every lender in the country uses it. The insurance companies use it for total losses. So it does help create accuracy there. It supports our advocacy efforts with the OEMs and with the government when we need it. We have obviously we can give the media a better perspective, and we are actually using some of that data next week in a panel discussion with the Federal Reserve Bank. And we're using it in our 20 group program, and we're also using it in our dealer academy. Here's my contact information, and that's my direct line. That's my email address at NADA. I would tell you this, that probably 18 to 20 years ago, when I was exposed and a dealer to this project and this idea, I wasn't in favor of it because I had a fear of what was going to happen to the data and how it would be used. Having now worked with it for 5 or 6 years here at NADA, and becoming more involved in it as the data world has evolved. I can unequivocally tell all of you that if I were still in business today, I would be using the reports to help me run and more effectively to operate my business, and I would have no concerns about how the data is used, because if you don't trust us and your association, we work for all of you, and if you don't trust how we would obviously monitor it and use it, then I think we have a much larger problem out there. Let me just give you a real quick recap. We obviously have this initiative. We would encourage all of you to support it and help us. You're going to get back some great operating reports if you do choose to help us. It's totally free. We are looking at the overall structure of a lot of data and where it's going and how it's being used, and the people that are far more intelligent than Stu Zalud is are beginning to craft some solutions and possible solutions to some of those issues and problems. We are aware of it. Our eyes are open to it. We know that there are some problems out there, and I can tell you that we will reach a solution, and I think it'll be palatable for everybody. You know, we don't want to affect anybody's operating business, but we want to make sure that it's done right, the right way, and for the right reasons. And having said all that, I'm going to turn it back over to the folks at Dealer Communications, and if there's any questions, I'm very happy to answer them. And I've enjoyed spending a little bit of time with you. I know I'm a little bit short, and that's good. I'm always told be short rather than long. So thanks very much for your time and today. And any questions, if you don't have them now and you think about them, please send them to me or call me. I'll be happy to try to answer them.
Thank you, Stu.
You're welcome.
Just checking to see if we have any questions that came in right now. We do. We have one from Frank White. Do you consider a business model in which you would pay dealers for the right to use their data instead of offering the analytics, etc.?
Frank, I certainly believe that there's a monetization, and we believe, NADA believes that there's a monetization for that. And we want to get you back to a position where that monetization is in your dealership. We don't know how that's going to look yet. So I think if that were the answer, and that might be a solution. Again, we're looking at a lot of different things. That's a very possible solution. I won't tell you that that's the best solution, but it's one that we've certainly addressed and talked about. And sure, if it means some type of remuneration, because we believe that there's value. We know that there's value, and you do too. And clearly, right now, the way the system is, nobody's you're not able to monetize it. You basically give it up, and in many cases, buy it back. So the answer to that is yes, we're looking at it. I don't know that that'll be the final conclusion, but it is one possible solution for us, and we are very much attuned to that fact. We want to get you back into a position of control.